The world's biggest investment winners today aren't just coming from one country. They are coming from everywhere. From global technology leaders to fast-growing consumer markets, long-term opportunities are increasingly shaped by global trends. So how can investors participate in this global growth in a disciplined and consistent way? Good day everyone, and thank you for joining us. I'm Karlo, Biglang-awa, Head of Customer Experience. To help us make sense of today's global equity landscape, we're joined by an expert who closely tracks markets around the world. Please join me in welcoming Mikko Vergara, a fund manager from Sunlife, who monitors the MSCI All-Country World Index, one of the most comprehensive global equity benchmarks covering both developed and emerging markets. Mikko currently heads the Equity and Global Funds Desk of Sunlife Investment Management and Trust Corporation. With over 15 years of experience in the investment industry, he has held key roles in portfolio management, equity research, and trading. In today's discussion, he will discuss to us and we will understand the current global market narratives, the opportunities and risks across regions, and why global diversification through an index-based fund continues to be a compelling long-term investment strategy. Hi Mikko, good morning. Welcome to our Fund Spotlight. So usually in this session, we feature our fund picks together with the fund manager. In Fund Source, we are trying to give our clients our quarterly fund picks and outlook so we can help them to have a diversified, not only local but global portfolio.
Okay.
So being the fund manager who monitors the ACWI, we have some questions here, Mikko, so we can guide our clients. So the first question that I have here is that if you can give us an overview of the current global equity market environment and the key themes driving performance across the developed and emerging markets today.
Okay, so thanks for the questions, Karlo.
Yeah.
I think top of mind, first of all, of course, geopolitics. So you know how when risk events arise, people move into different asset classes.
Yeah.
So I think everybody's seen the performance of gold. People are still in fixed income because yields are very high. And of course, people are waiting for central banks to cut rates. So once rates are cut, people are expecting that equities should rally more because borrowing costs will move lower, and then it'll be good for bonds as well. So I think that's really driving the dynamics we're seeing for this year.
So I think given that scenario, the investors now should really have a diversified perspective, not just focusing on equities but considering fixed income, or if they invest in equities, it should be a type of fund or an asset that could have them be diversified in that scenario or that angle, not just focusing on one stock or maybe a geographical location, given that geopolitics now are really around the world.
Yeah. So for us at Slim TC, we have a framework where the asset classes compete with each other. So it's not just local equities. It's local equities versus global equities versus local fixed income versus offshore fixed income. So we have scorecards for all the assets, and then they compete to get the allocation.
Okay. So the scorecards will help you identify if this particular fund will be suitable for this scenario. Let's say, for example, there will be a lot of rate cuts projected for the coming quarters, or maybe this is a season wherein equities will rally due to the lowering of interest rates from the Fed or even the BSP.
Yeah, so each desk has their capital market assumption, the return, the volatility.
Okay.
So that's factored into, if we put assets into this desk, what's the expectation for clients? And we match it with the market view, and we match it with the client portfolio. What is their mandate?
Right. So I want to circle back and focus on the ACWI. So right now, the ACWI or the All-Country World Index, the US remains the largest component. So how sustainable is the earnings growth coming from sectors like technology and communication services? And how does this influence the global equity returns?
Okay. So technology is about 28% of the MSCI ACWI. So if you think about an index which the market is familiar with, let's say NASDAQ.
Right.
NASDAQ is looking to put out 30% earnings growth this year. Broad S&P, I think around 15%.
Right.
So the expectation is for double the earnings growth out of the tech sector.
Okay. So outside the US, how are regions such as Europe, Japan, and selected emerging markets contributing to ACWI? Since I've seen that 65% of the ACWI focus on the US while the remaining scattered around the other regions. Yeah.
So very important question. So for clients who are new to this product, US is 60% of the overall weight. Europe, it's about 16%. Japan's about 5%. Asia's maybe 9%. So last year, US lagged MSCI ACWI. But it was still a good year for ACWI investors.
Okay.
So even if US is a big share, the other countries are contributing in terms of returns as well because they are material, maybe about 44%.
I think the benefit of being invested in ACWI, since last year we've seen volatility in the US. So after the Liberation Day, there's a dip, but again, it rallied up. But the good thing here, we've seen that there's broadening out of the US. So at least with the ACWI, they can participate with just this fund and they can now be diversified.
That's right.
Yeah. So emerging markets are a meaningful part of ACWI. How do you view the positioning of markets like China, India, and Southeast Asia in this current environment?
Okay, so for us, Southeast Asia, well, Asia as a whole, it's still a growth market. It's about 10% of the MSCI ACWI, all put together.
Yeah.
And the key part of it is, so for example, you have China, Taiwan, South Korea. They form part of the AI value chain.
Right.
So they manufacture chips, hardware, they contribute talent as well, diba? So I think if you want to be part of that structural theme, you need to stay weighted in our part of the world pa rin.
Yeah. Since now we've seen that they are cheaper in China, the AI rally,
Yes.
there's also growing in that area. So at least clients now can participate and have it diversified in these geographical locations.
Yes.
So next question that I have here, what key global risk should investors be mindful of today, such as inflation trends, interest rates, and a while ago you mentioned geopolitical tensions or currency volatility, and how will this affect a global index like the ACWI?
Okay, so of course, again, asset classes are competing with each other, right? FI investors want to be long their asset class.
Yeah.
Equity investors want to be long their asset class. But we all are subject to policy.
Right.
So if the Fed doesn't cut rates, fund managers who are overweight or long duration, their bets won't pan out yet. For the same thing for equities, our bets won't pan out to that same degree.
Okay.
So we want to be balanced, we want to be mindful of policy and geopolitics, definitely, for this year.
Having said that, I think it's important for investors also to know the time horizon of their investment goals. So if, let's say, they want to participate in an ACWI type of fund, I think long-term participation will really be beneficial for them.
Definitely,
Yeah.
definitely.
So I think at this point we can shift towards the actual fund that you have in Sunlife.
Sure.
So let's talk about the Sunlife Prosperity World Equity Index feeder fund. So first question, why investor should consider a global index like the Sunlife World Equity instead of picking individual stocks in countries or regions, and what advantages does this offer for long-term investors?
I think investors in the Philippines are smart enough to pick stocks. They're smart enough to pick bonds.
Right.
But for some parts of their portfolio, they may not have the time to do everything. So definitely, I support security selection. But for some parts, again, you can just leave it to the fund manager.
Right.
So ACWI fits that. If you think about the weight of the Philippines on the global equity index, it's 0.03%. Diba? We talked about the US 63%.
Yeah.
So do you want to spend 100% of your time thinking about 0.03% of something in the global market?
So as an investor, you can just leverage on the fund manager's expertise, and in this scenario, through the Sunlife Prosperity World Equity Index.
Yes.
Yeah. So second question here, how does ACWI naturally adapt to shifts in case of global leadership, such as the AI, as we've mentioned a while ago, and now we're seeing semiconductor giving its growth and emerging market consumer growth, and how is this reflected in the feeder fund? So there will be shifts, for, of course, in the coming quarter or months, and yeah, how is this reflected, if ever, in the fund?
Okay, so the setup of MSCI ACWI, the underlying index, it's a free float adjusted index.
Okay.
So if a stock, say, it's moving up, its weight will also move up to that degree. And the nice thing about being a free float index, it removes untradable shares, strategic holdings by governments or long onlys. So you're really talking about the main liquid share count. So again, recall in the past, maybe 30 years ago, you had more car manufacturers on,
Right.
on indices, diba? GE and whatnot as well, diba? Those types of companies. But now we're changing in terms of market composition. And that's a factor of, equity prices and share count. So the index, or ACWI, should reflect market leaders, as they grow in size and take up a bigger weight on the index.
Yeah, I think that will be helpful for investors. So instead of them chasing which company will grow in the coming 5 or 10 years, at least through this fund, ACWI itself will shift depending on the trend and, of course, who will be the leaders per industry.
Yes.
Okay. So right now, technology has a significant weight in the ACWI. how should investors think about concentration risk? Like for example, last year, the Mag 7 drove the S&P 500, and now with ACWI 65% exposed in the US. How does broad index exposure help manage sector and regional rotations?
Okay. So for investors who really want a tech story, they should go to Nasdaq, diba?
Okay.
NDX, another product. But for investors who just want global equity exposure, so for ACWI, for example, financials, so the banks and whatnot, they're about 17% of the index. Industrials, about 10%. Consumer discretionary, about 8%, 9%. So you're not just getting one sector, you're getting a multitude of other sectors that you can participate in. So if one sector is slower, hopefully the other sectors are moving up, diba?
Right.
Not the same outcome as that lagging sector.
Right, that's very important. So last year, we've seen that the Sunlife Prosperity World Equity Index ended with around 21% of return. So although we've seen volatility in the global market, despite the tensions and even the challenges,
Yep.
so it performed well. So how does this diversification compare to investing purely in Philippine equities, and how it can help investors?
Okay, so we've done the numbers. For 1 unit of ACWI versus 1 unit of PCOM, the offshore position is 25% less volatile.
Okay.
So if you inject 10% of ACWI into your client's portfolio, you would reduce portfolio volatility on that equity sleeve by 2.5%.
Right.
So, you're not giving up a lot of upside, but you're improving the volatility characteristics of your portfolio also.
Yeah, that's very important because for investors who want to position long-term, decreasing your volatility will give you somehow confidence to really position long-term, do cost averaging, and maximize the potential return while managing the risk, of course. So currently in our platform, we have around 70 plus funds, combination of equities and fixed income. So I think that's the essential part of our program here. So we can help our clients not just participate in equity rallies, but of course manage risk. So we release our quarterly outlook wherein we have our top fund picks for equities and fixed income. So like this one, we're featuring the Sunlife Prosperity World Equity Index Feeder Fund. But of course, if you want to manage your risk, it's important to also be invested in other type of funds like the fixed income, which we will be discussing in our upcoming content. And of course, we encourage our investors to really look at our insights tab in our COL Fund Source platforms. And in that sense, we can guide you on a regular basis to help you in your investment decisions, may it be short-term, medium-term, or long-term. Thank you so much, Mikko, for those valuable insights. While global markets can sometimes feel complex, conversations like this remind us that investing doesn't have to be complicated. It simply requires discipline and a long-term perspective. By investing in a broad, diversified index like the MSCI All-Country World Index through Sunlife Prosperity World Equity Index Feeder Fund, which is available on COL Fund Source, investors can gain access to the world's leading companies, global innovation, and long-term growth opportunities beyond the Philippine market. For our clients and viewers, we hope today's discussion helped reinforce the importance of global diversification and staying invested through market cycles. To continue learning, don't forget to subscribe to the COL Financial YouTube channel for more timely market updates and investor education. If you'd like to explore how global equity funds, including those available on COL Fund Source, support you in your financial goals, our team is here to guide you every step of the way. So once again, see you in our next episode and hope you learned a lot this morning. Thank you, everyone.